What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 25th of 2017. Well, folks, as you all keep up with the channel, you're probably aware that I love to answer questions that I get down in the comments down below in my videos. And if there's one question I've gotten asked a lot inside the Data Dash community, it's the differences between investing and trading in cryptocurrencies. And not only that, but which one should I choose at the end of the day? It seems it's such a simple question, but I get it asked by a lot of individuals inside the Data Dash community, and it's usually from two different types of people. I have a lot of newcomers coming into the cryptocurrency space, and they're like, Nick, all right, look, what's the difference between investing and trading? Are they interchangeable terms? Well, some would say they are, but there's some strict differences between investing and trading on their fundamental definitions. And I'm going to help break that down in a very simple way so you can get an understanding of both. And then also, for those of you out there who are more developed in the crypto space and know the definitions of the two, on how to decide which one is right for you. So I'm going to be helping answer both of those questions inside the given video, and we're going to keep it short, simple, and to the point. All right, so let's go ahead and dive into it. First and foremost, let's talk about investing. Now, for those of you who keep up with the Data Dash channel, you're probably aware of all my long-term investing memes. I have hashtag long-term investing. I always recommend the mass majority of you out there long-term invest, and there's a reason for that. I'm a person who goes off of facts and goes off of numbers, and I know that the mass majority of you out there will benefit long-term from investing. As we'll talk about later on with trading, it's a little bit more of a risky business, but in investing, it's a pretty simple term to understand at its core, and it's also very simple when applied to cryptocurrencies, just like how it would be with stocks or buying a home or whatever. At the end of the day, the objective of long-term investing is to benefit from the long-term run-up of cryptocurrencies. And for the mass majority of you out there, this is going to be the best option, most likely. Now, there's a few different kind of pros that come with this. At the end of the day, first and foremost, you have much less stress than the average individual who's trying to trade. With long-term investing comes the ability to pick good projects, hold it for the long run, and really not make too many changes frequently to your portfolio. You keep things very simple. So at the end of the day, you're not going to be checking your portfolio 24/7, seeing how you're doing, swiping your phone to refresh the page and see what your gains are at. At the end of the day, you're really just going to be picking good company or good instead of companies where you would with the stock, buying good cryptocurrencies at a cheap undervalued price in your mind after you've done your research, and then holding it for the long term and hoping in a few months to a year or maybe 5 years that cryptocurrency is going to do much better, it's going to be valued at much more, and you could possibly sell it or just continue holding it, whatever it may be. But again, because of this, you have much less stress. Second up, another pro that comes with it is you're placing your funds primarily in projects with long-term potential. And this is awesome because not only do you have a fundamental understanding of the value behind the project, but you're also knowing that you have your money in things that you see doing well over the next 1 or 5 years or whatever time period you're trying to invest in. And the great thing about that is that you have a sense of confidence in your investment. You're not just buying something off of fluff, off of hype. That people are throwing at something. You're buying into something because you understand fundamentally that the technology might be a game changer, that the team behind the project might be great. And a lot of this is also found inside the third part, researching on fundamentals, not hype. Again, very similar in the same sense of being pros, but at the end of the day, researching can be very rewarding. Now, researching fundamentals is a very good skill to build upon. There's no specific one way to do it. Everyone has their different methods and stuff, but I built a procedure that's relatively simple at the end of the day, and I can even break down into a video. If you go and check a lot of my coin coverage videos, I've covered a ton of different coin projects in the cryptocurrency space, and there might be 1 or 2 that I've covered that you might be interested in checking out. And I highly recommend you go watch them because inside those videos, I'll show you what I generally do. In my personal way, I do it more in-depth outside of the video, but when I summarize it in a video, I keep it very short, and I show you all the different resources that I tap into. I check out the website of the given project. I, more than anything, read the white paper. And this is something that if you're a newcomer to cryptocurrencies, you need to get in the habit of reading the white paper. A white paper is a great summarization of the team's work in the sense of the objective of the project, the timeline of the project, the value proposition of the coin or token, and at the end of the day, who's behind the project. A lot of other interesting factors you need to know about, much like you would if you were evaluating a company or investing in a stock of a company. So again, Researching the fundamentals is not only beneficial as a long-term investor and you need to do it, but it comes as a pro, seeing as you're not buying into hype, you're buying into a confident factor that you know that this project is most likely going to do well in the long term. Along with this as well, you have a lowered risk through established diversification. At the end of the day, long-term investors have a very nice risk to reward profile because at the end of the day, we all kind of realize, if you're optimistic on cryptocurrencies as a whole are going to go up over time. I think most of us agree with that. Along with that, you have established diversification in great projects. Now, what does this mean? Well, if we've already done the research on the cryptocurrencies we're interested in, and we know that they're most likely going to be good projects, we can also diversify and invest in multiple cryptocurrencies. I know a lot of people out there who just say, just buy Bitcoin, or just buy Dogecoin, or whatever cryptocurrency you run into. At the end of the day, diversification is key and essential to long-term investing in cryptocurrencies. And it also comes as a benefit because you're not worried at the end of the day of, I'm just holding Dogecoin. Let's hope for the best. At the end of the day, Dogecoin or Bitcoin or Ethereum or whatever cryptocurrency you want to toss in there, really at the end of the day could go to zero. Coins are given value much like any other currency or any other stock or bond or whatever it may be by humans. We give value to things through market exchanges. And at the end of the day, if something goes to zero and you're stuck in one thing, you're out of luck. In long-term investing, though, you're recommended to diversify. And you're most likely going to end up diversifying because there's not one project you're most likely interested in. So what are the levels of diversification? Well, I recommend at least at a minimum 3 different crypto projects that you believe in, but I highly recommend you get more in the range of 5 to 10 if you're going to be long-term investing. And what's great about this is that whereas in most cases cryptocurrencies as a whole, and this is the reason you don't want to hold one, about 90% of cryptocurrencies, and I would assume that number is going to grow in percentage, 90% are going to fail in the long term. They're going to go to practically nothing or zero. So because of that, you want to stay diversified and hope that you might have 1 or 2 of the coins that you're holding be the next Ethereum or the next Bitcoin. That's the whole objective of long-term investing. Now, you can do really excessive diversification as well, as I'll talk about later on with some resources. There's a video that talks about different methods of long-term investing. But at the end of the day, all of them come with a rich sense of diversification inside your holdings, all right? So that's generally the benefits of long-term investing. There's a lot to benefit from because it really leads towards that top pro, much less stress. But there are some cons to it as well. The first thing to realize is that many of your holdings will not beat out Bitcoin. Now, if you all keep up with my channel, you'll probably get what I mean by this, but some of you who are newcomers, I'll try to break down very simply. Basically, at the end of the day, Bitcoin has been killing. As you all know, if you're probably aware of cryptocurrencies, you know Bitcoin. And Bitcoin has been doing very well in its price action. Well, at the end of the day, Bitcoin is moving pretty fast. And if your altcoin positions, the alternative coins that you might be investing in, this could be Ethereum, Monero, Dash, or other small coins such as Substratum, Vertcoin, whatever it may be, if you're holding these coins, they might not keep up with the momentum of Bitcoin. And in most cases, a lot of your long-term plays most likely won't keep up with Bitcoin. There will be some that blow out of the water Bitcoin and they do tremendous, but there will be some that lag behind. So if you're willing to live with that, it's not too much of a con, but it is something to realize. Now, it still could go up in USD valuation as well. You could still gain on your investment, but it might have been just better to have that money in Bitcoin. That's the whole thing. You want to beat out Bitcoin when you invest in cryptocurrencies, to beat out Bitcoin's momentum. All right? So the last part of all, and this is something that I see a lot of people, I think in our modern day kind of tech-based world where things are happening left and right, we're making decisions very quickly, and we want instant gratification. You need excessive patience when it comes to long-term investing. This is extremely key, guys. I can't stress this enough, and I find so many people who get involved in cryptocurrencies and they think it's just going to be a gold ride where they can buy something today and sell it tomorrow for a 50 or 100% return. It's not what cryptocurrencies are about. You gotta make sure to have an established sense of patience in your investments, okay? So, excessive patience is required. But for some of you out there who see these pros and you're like, oh, this is great, but I'm not someone who's very patient and I want to beat out Bitcoin more frequently than not, well, there's another method for you. There's trading. Now, as you'll probably see, I have the Jordan Belfort Wolf of Wall Street photo in the back, and I think this really pertains to traders' mindsets, because everyone who's a trader, they feel like they're on top of the world. They feel like they're beating everyone out of the water, and they're going to be 2 steps ahead of the game. And with trading, you can be great at trading in cryptocurrencies, especially now while it's early, because it's very early with all the different altcoins popping up in the space, while it's a very new market and things are very volatile. Trading is, at its core objective, timing the market and beating up Bitcoin 24/7. So roughly speaking, you all probably have heard people doing trading in stocks and trading all types of different equity and asset markets. Very, very fancy stuff. But in this case, we're talking about cryptocurrencies, and it's really buying something low and selling it high, and hoping that you can time the market rather than buying something in the case of long-term investing at a low price very early on and holding it for the next 5 to 10 years. Traders are buying and selling things in shorter periods of times, and there's different types of trading. There's day trading where you buy and sell something in a single day, or swing trading where you buy and sell something within a week or within a month. So again, it's really on your kind of time frame and your trading style, as you'll find later on. But at the end of the day, trading is something that's more on a smaller scale of time, and you're not really riding on things for the long term. So there's some pros that come to this. First and foremost, with trading, you're working in a shorter period of time, which means there's higher risk. But at the same time, you have a higher sense of potential returns. So when you're making trades and stuff and you're not trying to look at, I think this is going to go up 1,000% over the next, 5 years, you're looking to make trades that like, look, I'm trying to get 20 or 30% here in the next day or two. Sadly, as many people, turn away and they say that can't happen, cryptocurrencies, it can. And you can potentially make those returns. Again, though, there's at the same time, but the higher risk of return, this can also be a con and a higher risk of losses. So you have to keep that in mind. But if you go into the next pro, you'll most likely avoid taking the losses here, and that's learning to use technical analysis to spot buying and selling opportunities. This is something that your average long-term investor most likely won't know how to do. And using technical analysis, this basically means knowing how to read charts and read price action in a given cryptocurrency, in the case of what we're doing, cryptocurrency. So again, it's being able to look at a chart and really use in-depth indicators, understanding how to take on trader psychology, other people who are trading, and really understanding what they're going to be looking for, when to buy things, when to sell things. And as I'll talk about later, we have a ton of resources for this, but really it's really rewarding to learn how technical analysis works and how markets work. And you can take a lot of this information and apply it to different markets, such as stocks as well, if you're interested. Along with this as well, you're in the know on the hottest cryptos trading. Now, what does this mean? At the end of the day, long-term investors will find projects that they believe in and invest in the long term. And at the end of the day, they'll miss out on a lot of the cool, hype new projects that are coming out. They won't stay as up to date because they'll most likely be stressing a little less, kind of taking it easy. Well, if you're on the forefront, if you're trading and you get into Discord trading group rooms, Telegram groups, all these different message or voice communication channels, you can start networking with all types of different traders. And you can learn what to spot, like what to look out for in cryptocurrencies, or maybe share an interesting project that just launched on the market and is showing really good technical patterns, things like that. You're always in the know, and you can spot those very kind of short-term opportunities that investors will never really have the opportunity to invest in because they're not keeping up with it. So again, if you can stay ahead of the game, if you can put the discipline as a trader, and you can learn and actually learn from failure at the end of the day, and take what you failed on and really build upon yourself, you can become a successful trader. I will keep in mind, at the end of the day, I want you all to keep in mind as well, that most day traders lose money, okay? There's an estimate in traditional equities markets that 90% of day traders lose money at the end of the day. Not to mention, the 10% who do make money usually don't end up beating the either the S&P 500 or generally long-term investors in traditional stock markets. Same goes for cryptocurrencies. I would say that it's not 90%. Definitely a lower number than that fail to make money day trading. But at the end of the day, there's a lot of people who day trade and they just gamble. They don't actually try to actually trade and do strategy with technical analysis. Along with that as well, there's swing trading, which is where you swing within a period of time, as I talked about earlier, that's more than a day. And swing traders usually turn out around even and stuff. Some win, some lose. Again, there's usually at the end of the day with trading, there's someone who's going to win and someone who's going to lose at the end of the stick. So again, at the end of the day, you're most likely going to lose money trading rather than long-term investing. So that's why long-term investing is seen as probably the better option. But if you can put the discipline, put the effort into actually learning how to trade properly, usually this isn't much of a con to worry about. Along with this as well, seeing as you're going to have to learn a lot more in the sense of reading price action, you got to keep up to date with your portfolio and the charts and all that crazy stuff. You're going to be facing much more time and having a little bit more stress in what you're putting effort into in the sense of trading. So again, much more stressful, much more kind of, reading the charts, keeping up to date with things, rather than long-term investing where you're checking to see whether or not, something's doing good within a week or a month, So again, but much shorter periods of time. All right, so now that we've kind of established the difference between the two, I want to go ahead and point you all towards some awesome resources. I have done a lot of coverage, not only on up-to-date information on cryptocurrencies, but fundamental understanding of things. If you're interested in investing for the long term, I have some great resources here. I've got 3 videos right here that focus on different focus points in investing in cryptocurrencies, and all the links are down below in the description. I highly recommend you check them out. But the major thing, if you're curious about investing and finding good coin projects, definitely, like I said, go check my coin coverage videos. Those are great resources to learn as to how to analyze good projects. And of course, sometimes I'll talk relatively positive about things, but it doesn't always mean I'm going to invest in it. You've got to, go through projects with a sense of criticism, a sense of, betting that this project is most likely going to fail. What is going to be the secret sauce that's going to make this last for the long term? And these videos will help give you a better understanding on how to build a long-term portfolio, different ways you can strategize long-term investing, and also things to look for when you're long-term investing. Again, like I was saying with the coin coverage videos, finding the good projects. Along with this as well, if you're curious about trading, I've got tons of resources for it. I know many of you out there, even though I recommend 90% plus people should go ahead and actually just long-term invest, I know many of you out there are viewers and you're trading junkies and you want to learn more, or maybe you're someone who's new to trading. Well, if you're new to trading and you're new to cryptocurrencies as a whole, go check out these resources. I highly recommend it, even more than long-term investing, because if you're going to trade, you got to come in with strategy. It's the first thing I talk about in my Trading Cryptocurrencies for Beginners video, and then I've also got a ton of other resources. Not only trading cryptocurrencies for intermediates, but I highly recommend, if you watch both of those and you still can't get enough, or if you want to get something that's a step-by-step series, I have my trading tip series, where there's a playlist, much like the other videos linked down below, where you can check up on multiple different trading tips that I've provided on the Data Dash channel, completely free to all, that really help you kind of get an edge on how to read markets, how to read price action, and it really breaks it down into simple terms, okay? So again, I want to keep things simple. Don't want to make them complex for you all. I know you guys want to keep things both short and understandable at the end of the day, and not as complex as finance heads would like to make them be. All right, the last part of this is really kind of a summary on the video, and it's building your strategy. Now, throughout this video, we kind of pose the question of trading and investing as if you have to do one or the other. You have to be a haywire trader who's drinking 4 cups of coffee and has 6 or 7 monitors around, clicking their keyboards, plugging in orders, or a long-term investor who's sitting there with his coffee, his newspaper, or his crypto wallet, checking, seeing if he's doing well in his investments for the long term. Folks, you don't have to do one or the other. You can actually not only experiment with both, but you can actually do both at the same time and allocate certain parts of your portfolio, your holdings in cryptocurrency, into different types of trading and investing. So say, for example, you want to play it safe and you want to have 80% of your portfolio in investing. But you also like to take a little bit of risk and you want to have fun chasing the charts and trying to beat out the market. Well, you could do it where you trade cryptocurrencies for 20% of your portfolio. So again, you can find the balance that works for you, and I highly recommend before you put any serious money in, if you have a lot of cash on the side, even if it's a few $100s, I recommend you start very small. You start very small, and you start messing around with these different types of methodologies and seeing what works best for you. Experimenting and putting real money on the table, but very small quantities, is the best way to do this, folks. I can tell you from trading in stocks and cryptocurrencies. I've learned it both the easy way and the hard way at different moments in time. And I've learned that it's best to just experiment, to learn very early on, and you'll take those strategies and they'll become winning strategies that you can carry on towards much larger investments. All right, everyone. Well, that's it for the video. Thank you all so much for watching. If you do have any questions still about the differences between the two, I'll try to get to answering them, and hopefully those of you out there in the community who are informed on the topic can help answer some of those questions. We here at the Data Dash community build upon one another and try to help one another get smarter. But anyways, everyone, that's it for the video. Thank you all so much for watching, and until the next video, I'll see you all later. Take care.